Welcome back, ladies and gentlemen, to the AllinCrypto podcast. I am your host, All in Crypto, and today I am delighted and excited to be bringing a friend of ours back on the show. I think this is his third appearance on the channel. Of course, I am referring to Brandon, the HbarBull. Welcome on board, Brandon. How are you today?
I'm doing good. I'm having fun with it. This is the most exciting space you could be involved with, and I love covering our little corner of it. So I'm happy to be here.
Yeah, little corner, but I suspect that's only a temporary thing, certainly in regards to the direction that HBAR and Hedera is moving more broadly. But we've got a lot to get into. It's been a little while since we've had you on the show. Of course, there's been a lot of controversy that has been floating around in the certainly HBAR Hedera space more broadly. And I think there's a lot of questions that people perhaps want answering. People perhaps want to know what's been going on. And that's really where I want to start. I want to dive right into the controversy to start the interview off before we get into loving Hedera Hashgraph like me and you both do. So, a good place perhaps to start is in regards to what the controversy is. There's been some news in regards to the CEO of the HBAR Foundation stepping down. Of course, you've came out publicly and said that you are no longer going to be working for the HBAR Foundation. Could you, and I think you're in a better place than I am to talk on this, give us a bit of a rundown of what the kind of controversy in regards to Hedera Hashgraph is at the moment?
Well, I think the issues that we saw are certainly not unique to the HBAR Foundation or unique to Hedera itself. These are issues around tokenomics, around compensation, and things along those lines. And what essentially happened was there were grumblings, right? People are always looking at this public information. They're looking at the graph, they're looking at, the chain, whatever it may be, and they're analyzing that stuff all the time. You know how obsessive people can be over this stuff. And what people identified was essentially the payer account for the HBAR Foundation. And they also identified because there's NFTs that are associated with certain people. There are all kinds of ways to identify which accounts belong to which people if you leave the right breadcrumbs in place. And so what they found was that the compensation in HBAR to certain parties at the HBAR Foundation. And it was to the tune of several 100,000 to over 1 million HBAR per month. So, we were up over 10 cents. You're talking about, $100,000 a month in compensation. And that is pretty eye opening to people that are supplying capital to the space and things along those lines. And in addition to that HBAR, it's assumed that there's also cash compensation. There is generally cash compensation as well. So you get a regular salary as executives in these organizations like the HBAR Foundation, the Hashgraph Association, Hedera itself, which is the governing council and the associated people with that. Hashgraph, which is Swirlds Labs, that whole entity. They just changed names. So we're talking about significant compensation going to these individuals. Now, it came out specifically around the HBAR Foundation, but I will tell you right now, it is not unique to the HBAR Foundation. And some of these compensations are comparable to what you would see on other networks. But the numbers are pretty jaw dropping when you're talking about a small organization of 35 people with no revenue. Essentially, it just the way it operates is people are investing into HBAR, and that's the asset that they have to then go and sell. So it's almost like a donation, or you can't really think of it as they're generating significant revenue to be able to pay these salaries and these HBAR compensations. And of course, the value for the HBAR is getting it from the free market. So I saw this happening in the background initially, and I was letting the HBAR Foundation know. I'm like, this could be an issue. This could be a problem because people are not going to be happy when they see these numbers. And then it broke more publicly, and I felt that I needed to, as we'll say, a thought leader in the space and somebody that just covers the Hedera space in general, to give my opinion, because people are going to look to me and say, "Wait, is this okay or is this not okay?" And if you were to look at it from the entire crypto space, you would say, well, maybe this is okay. because other people in these other organizations are getting paid similarly. I don't think that's how we should look at it. I think we should look at it as these are, pre-revenue or very small amount of revenue startups that have not become sustainable yet, and we should treat it like that. That means you be very conservative with your compensation and try to put the executives, considering their skill set and so forth, on par with somebody that might be investing in HBAR. And one of the examples that I've given is if you have, we'll say, an executive at one of these organizations getting paid $250,000 a year, and you have a professional, we'll say, an engineer or a doctor or a nurse getting paid also $250,000 a year, and that doctor, nurse, or professional is putting $50,000 into HBAR per year, they should be on par with that executive on one of these organizations. So, they should maybe get an HBAR bonus of $50,000, a year, not per month, and
Yep.
certainly not $100,000 per month. So that's the opinion that I put out there was, this is probably not right and something that we should address. Before I went out and did that, I talked to the HBAR Foundation and I said, "Hey, I'm going to say this," and there was some back and forth, like maybe you shouldn't do this. We're thinking about you and your future in the ecosystem and so forth. And I said, "Well, this is what I'm going to do. I'm happy to resign if that's necessary." And they said, "Well, that's not necessary. You don't have to resign. We don't think that's necessary at this point." But then a few months later, I get let go. So long story, trying to make that very long story short, it did go public and people got very upset about it. And I think the wheels have been turning with the other leaders and other organizations and the HBAR Foundation itself trying to address this over time. And I would say it's the entire ecosystem that's trying to address it as a whole. I don't think the HBAR Foundation itself was open to changing any of these things, but I think the ecosystem as a whole, the other organizations and the pressure that they can put on each other, are moving in that direction to try to make some changes to make things more fair.
Yeah, I want to kind of I wanted to interject a number of times because there's a number of things that you touched on there, and we'll sort of break it all down a little bit more broadly. Um, let's sort of separate. So let's really just focus first of all for many people that aren't familiar, and I'm sure many people are familiar. I've certainly seen a lot of the community, certainly over on Twitter, highlighting this. I've obviously seen your comments, many other comments out there. Let's maybe sort of take a look at what the HBAR Foundation actually is so that people understand their role within the Hedera Hashgraph ecosystem. And then we'll maybe touch on you being a good guy, because you mentioned the fact that you came out and sort of had gone to them and said, look, I want to bring this issue up publicly. I'm happy to resign over it. As somebody who's pivotal in this space, in my opinion, you are my go-to sort of source for news as it relates to Hedera Hashgraph. And there's so much, and we're going to get onto some of it towards the latter half of the video. But I think it has a lot more to do with you being a good guy in regards to why you actually thought, do you know what? This could be an issue. Let's address it. Let's remain sort of true to the ethos that this industry was built upon in regards to trust. People should know if this is happening, it could be a problem at some time. Let's face this head on rather than just kind of sweeping it under the rug, if you will. If we can start, we'll touch on that in a second. If you can start maybe just with talking about the HBAR Foundation, who they are and what they are, and some of perhaps what was going on.
Sure. So we'll break it off. There's several different organizations in the decentralized Hedera ecosystem. They're trying to decentralize all the time. And there's the Hedera Governing Council, where they have the Fortune 500 type companies that run and operate the Hedera nodes. And then they also handle governance. So determining what the fees might be or the roadmap for the technical side of things. And that's the Hedera LLC itself. And then a lot of the code that's actually written and the engineering that's done to maintain it, that's done by something called Swirlds Labs. It was recently Swirlds Labs. Now it's Hashgraph. And they pretty much get resources allocated to them from the Hedera Governing Council to maintain that engineering side of things. And they do some other things as well, developer relations and other things along those lines. The HBAR Foundation was tasked with specifically building out the Hedera ecosystem. So getting DeFi off the ground, and they did a fantastic job doing that. These foundations, it's not unique. There's these foundations in most of the organizations out there when it comes to these layer one networks. Whether it's Ethereum, whether it's Solana, they have these foundations that are tasked with this. Now, the HBAR Foundation was allocated 5 billion HBAR and a little bit more over time. So that's over 10% of the total supply of HBAR to do this. And they've done a lot of things very good in doing so. There's also some other organizations that have a similar role. The Hashgraph Association does a similar thing. They focused a little bit more on enterprise, but there's a little bit too much focus, I believe, on enterprise in general. But they focus on enterprise. They've also brought capital from outside. Saudi Arabia, they got investment from them. Qatar, they're actually trying to get even more investment. I think that's a really good way to go. Get outside investment into the Hedera space. But the HBAR Foundation has been tasked with building out all kinds of things, whether that's gaming, whether that's the HBAR economy, whether that's NFTs, some of the things that are we'll say, the enterprise focused things like Atma.io they've worked on. They've worked with Mondelez and SkewX on some of their use cases, some of the banking use cases we've seen out there. So they have a pretty broad mandate, but that's the main thing is they're trying to build out that entire ecosystem.
Yeah, so they're really an organization that's tasked with sort of furthering the ecosystem as a whole, whether that be gaming,
Mhm.
whether that be, Mondelez. I mean, this is the thing with Hedera, and this is why I kind of wanted to get this out the way of, is because what I want to get to in a minute is just sort of perhaps regrounding people in what an impressive project Hedera Hashgraph truly is and what progress it's made. This is just a bump in the road that is significant. It is important. It's important that we have these discussions and that we address some of the things that we're addressing in this video, because ultimately it's all, Hedera Hashgraph for me, there's a community of people behind it. And when they feel like they've been wronged or they feel like something might not be done in the correct manner, it's always worth addressing that. These are the people, the community are the people that are going to ultimately further the role of Hedera over time, I think, or play a big role in that. So the Hashgraph Foundation is one of the various organizations that is tasked with furthering Hedera Hashgraph's role within the world. And of course, 5 billion HBAR. What's the supply of HBAR right now? 556
Uh,
billion, is there something like that?
There's 50 billion total. There will only ever there's some pretty strong controls in maintaining that 50 billion as far as circulating supply, and a lot of this circulating supply is still in these organizations, so it's not part of the float, we'll say, but
Yep.
it is allocated out there. It's about 37 or 38 billion.
Yep. And their role with that is ultimately to go out to get those deals. And they have, there's definite proof that they've done a good job in certain areas in regards to doing that. The controversy comes in regards to certain individuals that work for that foundation getting, I guess, what we could call, I don't want to use the word unfair bonuses, or perhaps not being above board with exactly what they've got and when the bonuses are being allocated and all this stuff. Could we break down exactly what the controversy is in regards to the HBAR Foundation and perhaps the paying and what kind of kicked all this off, if you know what I mean?
Well, I think we could zoom out even further. These networks have a resource that they can distribute, and they can do it in all different ways. There's things like a fair launch, which is everybody can buy in under the same terms, or something like Bitcoin, where anybody can participate as a node. And of course, they're burning electricity to be able to get the potential of getting more Bitcoin. Now, one thing that's developed, especially around proof of stake networks, you can allocate these tokens in different ways. It's become pretty clear under the law that you're going through things like the Ripple case, that you are going to be able to fund these decentralized ecosystems through the distribution of the token. And I think that is absolutely what should happen. I think there needs to be new regulation around that. I think that and that's hard for the libertarian in me to say,
Yep.
but I've seen how the industry has struggled with dealing with this. So we are going to be able to use these token treasuries to build out these ecosystems, build out the networks, promote these networks, and so forth. but it's how are we going to distribute them? And what we've seen in the Hedera space is the vast majority of those resources have gone to employees, insiders, people that were early on in the network. But I think there's another way we can look at this. So there's three buckets. It can be those insiders. They're certainly necessary. Don't get me wrong, and they deserve to get compensated for the work that they put in. But there's the second bucket, the builders that are building on top of the platform, and that's what the HBAR Foundation has allocated a fair amount to, is finding those teams that they think will build and do a really good job building great applications on the network and allocating grants to those teams. A lot of those teams, from what I've seen, barely scrape by.
Yep.
And the teams that do get significant grants, a lot of times they don't work out. And it ends up being these, we'll say, we've coined this term, intrinsically motivated teams that end up having some of the best products. So the allocation doesn't seem fair in that regard either. But we'll say, and I don't know what the numbers are, but the vast majority has gone to these employees. A smaller portion has gone to the builders, and then incentivizing the token holders has been the last on the line. And ways you can incentivize, people to allocate capital to the ecosystem include things like native staking, right?
Yep.
And I think that's actually a really good way to distribute the token, right? It's
Absolutely.
bottoms up. You are rewarding the people that get in and allocate capital to your ecosystem, and the longer they're in, the more they get rewarded. The Hedera space has some of the lowest native staking rewards that you see out there. And then
Yep.
other things you could have, like, and this has been done to the credit of the HBAR Foundation, promoting things like the Hedera Dexes, Saucer Swap, other things in that DeFi space. You can incentivize them that way. But there's several levers that you can pull to incentivize capital to find its way into the ecosystem. And I would like to see a lot more of that. So, and that's where the unfairness has come in. It seems like the insiders have gotten the max benefit compared to some of these other people that are, or these other participants that are really important to the building of a decentralized network like Hedera. Namely, the builders, who have come in second place, and in a distant third, the capital allocators, or HBAR. Now, I understand that there was fear around potentially things like native staking. And the big fear around that is, what is the regulation going to look like? And I would have been even hesitant in the past to even talk about this. But now that the judiciary, at least here in the United States, some of the other large jurisdictions out there have kind of come out and said that, yes, this is a new thing. We are going to have to develop some rules for this, but it does seem like you are going to be able to use these resources to build out these ecosystems. I think we just call a spade a spade.
Yep.
That we are using this limited resource to build out this ecosystem, and that's okay. And we have to treat the people that are supplying that capital with a lot of respect and almost reverence. And the reason why I go like to that next step and say you need to treat it with reverence is because they found a bit of a loophole here. Back in the 1920s and before, a lot of times companies would mistreat their investors. And because of that, there was a lot of regulation that came out in the 1930s, the SEC, Securities Exchange Commission, to protect the investors, at least put it on a level playing field. Well, these decentralized ecosystems like Hedera are completely different, right? You can't call these things securities, or you completely stifle the innovation. You can't pay fees with it. You can't have an economy built around these tokens. You can't have micropayments, which is one of the things that I'm really excited about. You can't have any of that stuff. And that's all the stuff that is really exciting about this space. You can't have any of that and call it a security, because there are custody requirements, there are transfer requirements. So you just can't do that. But that doesn't mean that you don't treat the people that are allocating the capital with respect, and make sure that you're treating them fairly. And I think that's where a lot of the unfairness is coming from. And The other thing is this controversy has played out elsewhere, but I think Hedera is kind of leading in this space. A lot of the entities that I've talked to, or this is just, secondhand in most cases, it seems like they want to fix this. They want to address this. And I think Hedera can be one of the first to actually do that and try to make this a more fair space so we can prove that we can self regulate and self govern. And if we can do it the right way in the Hedera space, maybe that will dictate what some of these regulations might look like in the future.
The comeback is always bigger than the setback. And I think we've got to the meat and potatoes in regards to the issue here. You know, this foundation, this organization has been allocated funds, and it almost seems like those funds, certainly we see it within the community, haven't been allocated in the right manner. They've not been dedicated to the areas which are ultimately going to lead to the overall success. It's a really, really complex issue for a number of reasons. How do we move forwards, of course? And I'm sure you've definitely got some thoughts on this. But also, I've seen decentralized governances come into play. And there's issues with that also. And you often get this kind of a lot of proof of stake sort of decentralized governances go off your stake allocation. And you have the most voting power as a result of that. Then it becomes almost a bit of a kind of insider club in regards to who gets the funds allocated. They might have friends with this guy. So the point that you touch upon in regards to this isn't just a Hedera problem or a HBAR Foundation problem. It's far more broad within this industry. It's far more broad within the world. The thing that you've just come onto, which I absolutely love, is how does Hedera now try and set a standard or try to move away from these kind of issues? How do we look to put something new in place that kind of shows people how to do this thing that is, spending money that's there to sort of further Hedera Hashgraph's role in the world in a better, fairer, more beneficial manner. You only need to look at a government to see how they sort of misspend funds. I know you're a libertarian like I am, so we won't go down that rabbit hole. But how do we move forwards from this? This is a really kind of crucial question to ask before we get into some of the things that Hedera is currently doing and that are exciting within the ecosystem. Because I think this has taken away from a lot of that. I really do think that this has been
Well,
quite headline for a while now.
and I wanted to start off with some of the positive things, but to your point, I don't blame some of the people that were getting these
Of
excessive
course.
compensations because they say, well, I could go over with Cardano or I could go over with Solana and I could get paid the same thing. It takes a special type of leader to say, wait, time out. Just because they're doing it, it doesn't mean that we should be doing it. And is this exactly how we want to be leading the rest of the industry? Plus, you get into a framework. I'll say that, Hedera in the beginning, when they first started out, they were like, we're like a company, right? And the H bar is kind of like, and it's not a security. I'm not saying it's like stock, but this is the resource that we have. How do we allocate it? And they allocate it very similar to what you would see if you were allocating a stock. Like, oh, we're going to give some to the founders. We're going to give some to the employees. The higher up employees are going to get more. So, and then once you start going down that path, you get stuck in that rut and you get separated, just like the issues with governments. You get separated from where that capital is getting allocated from and what's in their best interest. The taxpayers are separated from maybe the people that are receiving entitlements or things along those lines. And it breaks down the not knowing where, and this was Brandon D said this, not knowing where your food comes from, and you get separated. The unique position that I was in was I was in a completely different industry when I fell in love with the potential of Hedera. And I invested about $200,000 of money that I made in that industry into HBAR, directly into HBAR. So I had a very unique position. The vast majority of the HBAR that I received was through putting capital into this space. So completely different perspective than, we'll say, an executive at one of these organizations. So I knew exactly how people were feeling. And I understood how people would feel that they were being mistreated. And when you look at there could be very poor people that are allocating capital by buying HBAR. And you're looking at somebody that's then getting paid hundreds of thousands, if not over a million HBAR per month. And you're like, wait a second, how is this fair? You aren't generating any revenue. You haven't met the goals that I expected you to meet. So why should you be getting this? And at the same time, against the backdrop of the staking rewards going from 6.5% down to 0.2% or less than 0.2%, that was how I was getting some of my rewards. That was the reward for me participating for a longer period of time. And when you put those two things next to each other, how is that fair? The response I often got when I would argue against very high compensation was, well, we have to compete for the top level talent that's out there. We have to compete to get these good employees, but you're not willing to pay competitive rates as far as staking rewards. So it was that, and that might be a special thing within Hedera, was we had that dichotomy between the token holders getting very low staking rewards and then putting that against some of the compensation that we saw come out. But you're absolutely right that I think Hedera is, bar none, this, you know has the most potential of any of these networks and has built a tremendous space. So on one side, we have limited risk so much within the Hedera space. We've built this fantastic council. We have, in my opinion, the best use cases, bar none, in the entire crypto space. But on the other side, we have all this uncertainty as to if they are going to be able to navigate and regain the trust of all the token holders out there, which are absolutely critical to the success of the ecosystem.
Yeah, I absolutely agree. It's one reason we pay so much attention to Hedera is because if you look at actual real world application, I mean, just look at Avery Dennison. Just look at any one of the literally hundreds at this point use cases that Hedera is not only working on but already fulfilling. We bring up Mondelez again. Everybody knows or indirectly knows Mondelez. I'm sure many of us eat their products. And there's potentially going to be something coming around the corner for that, which is going to be, in terms of TPS, you can imagine how high something like that might be, or any of the others. The question really is, how do we move forward from this? Because we know that we're in a very good position as an ecosystem, probably the best position. We've got a distributed ledger that is simply fit for purpose in regards to real world applications. The problem is, how do we go forwards from this issue? How do we look to make this more of a fair thing? How do we ensure that there's not only incentivization to work for these various foundations, but also to have that incentivization to see the organization do well, the community do well, and everyone kind of benefit from this? What are some of the suggestions you have? Is raising the staking rewards, is that something you'd be in favor of? Let's talk about
Of
that a little bit.
course. Well, there's a lot of reasons why I like staking rewards. I mentioned it's a bottom up approach. We'll say that there is a team that generates revenue in HBAR, and there's a lot of them out there. It's our DEXs, it
Of
is
course.
our decentralized exchanges, it is any teams that are issuing a token and getting HBAR in um, as payment for that. It could be NFTs, it could be gaming teams that are issuing in-game assets and getting that HBAR. Well, the ones that are most successful, of course, are going to have the most HBAR. Well, then they can get this little bonus on top of it, or it could be a significant bonus. I think it's a great way to goose the HBAR economy. And HBAR is critical because it is the numeraire throughout the HBAR economy, but it's also the on and off ramp for all of these teams, Karate Combat and Earthlings and all of the teams out there that are trying to build around that economy. And that's kind of the HBAR economy is linked, but separate from some of the enterprise use cases we have out there. So getting back to it, I think that's a way to regain the trust of the teams out there. We are going to allocate to you token holders, and I think that will have a lot of good follow-on effects. But it's fixing that trust. It's why should you trust us at this point when in the opinion of the capital allocators, you have not been judicious in your distribution of these tokens. And it seems like a lot of this is going to insiders, which is the exact opposite of what you would want. Um, that said, of course, there are fantastic people working across all of these organizations that have done an absolute fantastic job. But I think it also requires a reset. And what does that mean? That's, I think the HBAR Foundation needs to be rebranded, or even, taken down to the studs, and a completely new organization set up. Now, that doesn't mean that a lot of the people at the HBAR Foundation wouldn't find a home in this new organization. I think they will and would if it were to come to fruition, because there has been so much great work that's been done. It only makes sense for continuity between what the HBAR Foundation has been doing and then what a potential new organization. But I do think that that is the level of reset that needs to be done. And then across all of these other organizations, what are the things that you're doing to regain trust? Are you going to, maybe cut headcount? Are you going to address this compensation and shift from, you're going to get this amount of HBAR no matter what, to the successes, milestones that would be considered successes by everyone in the space, particularly the ones that have lost trust, which are those token holders. Now, I think this is happening. Just from
Wow.
the Mance has said things like Hedera 2.0, just from grumblings, there is, I don't know what the details are, but things that the president of Hedera is saying, Charles Adkins, you can tell there's a lot moving in the background. And I think we're going to be hearing about that in the months to come. But I don't think that they have unlimited time. They have to do this fairly quick. But from the things that I've heard, it seems like they are moving in that direction. I do feel for a lot of the people, a lot of even the leadership at the HBAR Foundation. But I think they've lost the ability to lead the Hedera space, the Hedera community at large. That leadership group is just going to struggle coming on a podcast like this and explaining things. I think there's always going to be that dark cloud. I just think it's time to kind of reset that, get some new leadership in, and start building from the ground up from the organizational standpoint, but continue on with all the great things that have been built. I was talking to somebody who is a marketing expert, and he said to me, and this has been over and over again, that you could build a community around just one of the use cases that Hedera has. And
Yep.
we have dozens of them, whether it's Karate Combat, whether it's Atmio, whether it's what Fresh Supply Company is doing, whether it's what Mondelez and SKUX is doing, our Guardian ecosystem and the refi space. All of these things have tremendous amount of potential to catch the imagination of people out there. And that's all you really need. You just need to regain that trust.
Yep. And I actually do see other ecosystems out there very much leveraging one Hedera like announcement or partnership for their entire sort of relevancy, if that makes sense. And this is the thing with Hedera that's always been transparent. We've got issues. The comeback is always bigger than the setback. It's going to be very interesting to sort of put a capstone on all of this to see how things progress. Me and you could talk all day long about this, and we could go and spin off various ideas in regards to what could happen. And of course, if anybody out there isn't already a subscriber to Brandon's channel or his Twitter, if you want to stay up to date with all this and see how things progress, Brandon's your guy. So do go and check all the links in the description. But I want to get back to loving Hedera with you because this is the thing with you. We've always highlighted you for your real genuineness, and I think this shows that more so than anything because you've kind of gone against an employer to a degree, if I can say that, in regards to doing something that's in benefit for the project, the ecosystem, and the community as a whole. And I think that's that you should be absolutely applauded for that. And you've certainly got my applause and many other people's out there, I must say. What I want to do now, though, is get back to loving Hedera. Let's talk about some things that are on the forefront of your mind as it relates to this ecosystem. We've done 3 interviews now where we've looked at various things that are huge, that go largely under the radar, whether that be the largest renewable energy supplier in Europe, tokenizing on Hedera, whether that be what's going on with the stablecoin suite. You name it, we've covered many things, but what are some of the things that are on your mind right now in regards to this ecosystem that you would say make it stand out from the rest?
Well, first, I would say that the opportunity within Hedera is greater than it's ever been because markets do not like uncertainty, right?
Amen.
And they don't like what they're seeing, and that's understandable. But if we can get through this, and all of the indications that I see that we are going to come out with a much stronger decentralized Hedera, right? We're going to come out, we're going to fix a lot of these problems, and we're going to come out stronger on the other side. And then all that's left is all the great stuff that's happening. One of the things that's the teams that we have building on Hedera will not be denied. And that's one thing that I've seen. They go quiet for a while and then they just come back. And when they come back, they have announcements that I couldn't be more excited about. And the main thing right now is the capital that these individual teams are finding out there in the public markets,
Yep.
or not the public markets, but VC and so forth. One of them is Neuron. We talked about Neuron last time. Neuron is a DePIN play, decentralized physical infrastructure, Internet of Things. They are deploying sensors out there. The last time we talked, I don't think that they had done their beta program,
No.
which is essentially putting sensors out there and actually starting to use them for DePIN projects. The first thing they're doing is tracking of drones and aircraft. They are getting so much attention around this that they just raised $3.5 million.
Wow.
So they're bringing outside capital in. We had Accenture go to MTech and is investing in MTech. Do you remember what MTech was?
MTech, were they not the stable coins within Africa?
Well, it's actually CBDCs, so central
CBDCs.
banks
Yeah, yeah,
digital
yeah, yeah, yeah.
currencies, focused on places like the
Ghana.
Caribbean and Africa,
Yeah, yeah.
the smaller economies out there. And they got Accenture, one of the largest companies in the world, to invest in
Wow.
them. So they're seeing traction there. We had Jam came out. So Tune FM is you think of it as like a decentralized Web3 Spotify. And they just got $50 million committed.
Wow.
These are the teams that we have building in the Hedera space, and that's just attracting some of the capital. Then we have Saudi Arabia investing $200 million into the Hedera ecosystem, Qatar investing $40 million into the ecosystem. So they see the potential here.
With
And
these
then there's
two, sorry to interrupt you there, Brandon. With these two,
sure.
Qatar, Saudi Arabia, do we know what they're specifically investing in? Is there some sort of specifics to in regards to what they're actually investing in? It's pretty impressive. You've got these startup kind of projects that are
Mhm.
leveraging Hedera. 50 million for a decentralized Spotify. I mean, that's insane. And this is the thing that people don't understand about this technology. It's not just finance, it's everything that it's going to affect. And if you understand the digital world that we're moving towards, which I'm sure me and you do, with the rise of AI, with the rise of the Internet of Things, blockchains play a fundamental role in all of this. We saw, for example, Coinbase facilitating a AI to AI monetary transaction. And now that seems a little
Mhm.
bit gimmicky, but what that does is that unlocks AI in regards to the real world. So in regards to Saudi and Qatar, what's going on there? What are they actually investing in? Is there a kind of proof of concept or something going on there? What's that all about?
I don't have all the specifics. So it is the Hashgraph Association, so a similar entity to the HBAR Foundation that has facilitated these investments. So Hedera is putting up 1/5 of the investment, and then they're putting up the other 80%.
Wow.
And I know that Saudi Arabia is really interested in IoT, Internet of Things, DePIN, and so forth. So I don't know all the different places where they're going to be investing, but I know that's one of the places that they are excited about. The other teams that we have, I certainly want to get into WiseKey and WiseSat. I don't know if
Absolutely.
you've talked about them in the past, but that has my mind absolutely blown. But also how these teams just continue to grind through the ups and downs that we see in the crypto cycle. At Fresh Supply Co., we talked about them before, and they were doing supply chain. We know there are networks that are just focused on supply chain. We have Atmio, which is doing 23 or 2600 transactions per second right now in supply chain. We have Hyundai and Kia doing a similar supply chain use case. Well, Fresh Supply Co. was also doing a supply chain use case. And initially it was just for the supply chain, but they told us from the beginning that they were going to do payments as well. And initially they were using MasterCard Provenance, which was like a private blockchain, but MasterCard realized it's not easy to run one of those networks and it's not core to their business. So where was Fresh Supply Co. going to go? Ended up going to Hedera. And not only that, they made it a lot easier for a lot of other entities that were using MasterCard Provenance to come to Hedera. Well, now
Wow.
what they've done is not only are they doing the supply chain, but they're also doing the payments. The really big payments for when you're buying goods from overseas, big businesses buying things, hundreds of thousands of dollars, millions of dollar payments. They're now facilitating those payments through the MasterCard token network. So they're using both Hedera to tokenize the assets and then using the MasterCard multi token network to facilitate those transactions. So how those things are exactly working together, I haven't even completely wrapped my head around. But when you're getting entities like Fresh Supply Co. that will not stop, and you can just see them just beating the drum over and over again and actually having their vision come to fruition, you know that they're going to be successful. And then all the fun stuff that's happening as well. I was down at Consensus a few months ago, and we had people coming by, and they were asking, they're like, we thought that Hedera was just the enterprise chain, but we also saw that Karate Combat is built on Hedera. Are they doing stuff like that as well? And that part of our ecosystem is absolutely blowing up as well. Gaming, Karate Combat has an event coming up here in a couple days. Unfortunately, uh, your viewers aren't going to be able to participate unless they've already gotten their karate tokens in their
Yep.
app. But it has continued to grow. So the last time we were on here talking about Karate Combat, it went from, I think the first event had maybe 2,000 people participating, 3,500, then it was 11,000, then it was 20 some thousand, then it was 40,000 the last time we talked, and that was just only a few months ago. The past couple events, they've had over 100,000 people participating.
Wow.
And just to watch this explode has been fantastic. I think like that's the kind of use case that you could build an entire network around, let alone the fact that Hedera has that and then everything else that we've been talking about. And I guess the last thing that I want to touch on that I think I found out about right after we talked last time was blockchain for energy. Blockchain for energy is a consortium. And you hear blockchain for energy, and you would think that there's a bunch of layer ones involved with this. There's not. There's just one. It's just Hedera. I don't know if they're looking to get other networks involved, but the other names on this really caught my attention. You have Blockchain for Energy itself, the organization, but then you have Saudi Aramco, you have Chevron, you have Chesapeake Energy, you have Schlumberger. These are the biggest energy names in the world. Now we don't have any large energy companies. We have the electricity provider in EDF, but we don't have any Chevrons or Exxons or anything like that on the governing council yet. But the fact that we're part of this consortium, and then the only other Web3 things in this are things that are part of our Guardian ecosystem. I don't know if it's Tolem or one of the other teams that's built on top of this. We don't know what's going to come out of it, but these entities like Exxon and Chevron and Schlumberger and Saudi Aramco aren't joining this for fun. They're planning on doing something with it. So that one is a big under the radar one that I don't think people are paying enough attention to. If I had enough time to get dedicated to it, I'd be paying attention to the Blockchain for Energy website every day because I'm really curious about what they're trying to cook up.
And this is solely on Hedera.
Well, it's the only layer one network that's part of this consortium.
Wow, unbelievable. And if you think about Saudi Aramco, like, come on, guys, this is one of the biggest companies in the world. And the thing is, it's not shocking. Like, if another blockchain or distributed ledger, because Hedera is a DAG, came out and announced even one of these announcements, people would just be like, we're almost so used to these kind of partnerships or these kind of alliances with Hedera Hashgraph that we're kind of used to it now. We don't see it as, okay, these are big things, but yeah, we've got loads of them at this point. It's kind of like if this happened on another chain, wow. You can only imagine.
Well, I think that, I mean, going back to when Google joined the Hedera Governing Council, these things would come out and people would be shocked that maybe there wasn't more movement. I think people often use CoinMarketCap or CoinGecko as the scoreboard. Like, this is where the success is. There's reason for that. because that's the best proxy for how much capital is available in your ecosystem to build all this cool stuff. But Hedera, even though we may not have as much capital, is still building the coolest stuff in the space. So that's again the opportunity that we potentially have. And I'm not sure. I think the main reason why we've had a disconnect there is Hedera is trying to build real things. Maybe in some cases they have too many employees. Maybe in some cases they're overpaying some of these employees, and that puts an awful lot of pressure on the market. So people are confused that Hedera has the best use cases, the best partnerships, the best consortiums that they're part of, but it's not moving the price, and that's what people consider as winning. So if we just fix maybe overspending and get things back in line, I think you will start to see that success. Even if we don't fix these things, I think Hedera could be a huge success anyway, because we don't know if low fee networks like Solana, like Hedera, like all the Avalanche, all the other low fee networks, we don't know how well that business model is going to work. But if one of them is going to work, it's probably going to be Hedera. The groundwork that's being laid is absolutely unbelievable. And it doesn't take very many of these use cases to make it completely sustainable and then go well beyond to continuing to build out the ecosystem, to continue building out the network itself, to incentivize nodes, to incentivize token holders. So, I mean, it couldn't be brighter. It couldn't be more uncertain. The future couldn't be brighter. But those things together just kind of make your mind do backflips. Like, you really don't know where to go with it because you have that uncertainty, but you also have all this potential. And it's just really hard for people to deal with. And there's a lot of people that, aren't professional investors that have gotten involved with this space, that it makes it that much harder. So yeah, it's crazy to watch. It's been a wild ride to be on, but I can't imagine. I wake up in the morning just super excited because I know I'm going to find so many more things to cover. I love my job. And what I consider my job is just informing everybody about the Hedera ecosystem. And I remember in the beginning, I'm like, I don't know if I'm going to be able to find enough content every week to put something out. I'm cutting stuff out every week, and my show has gone from 10 minutes to an hour and a half, and I can't fit all of it in. So this trend, I think, is going to continue, but we do have some major things we need to fix in the meantime.
Wow, Brandon, honestly, we could talk all day long. You put a smile on my face there. It's certainly got a lot brighter in this room as my two lights behind me have failed, or certainly ran out of battery, I should say, not failed. The failures on my behalf. Wow. I mean, what can you say? And the thing is, price doesn't always reflect fundamentals. There's a massive disconnect there, but people do weigh how well a project's doing up based on the price of it. And there's all these internal things you need to consider. And when you look at, I always get reminded of a interview that Jeff Bezos gave, and he spoke about the dot-com crash. And he spoke about the fact that Amazon's stock, it was just going down, 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 and it wasn't really doing anything. In fact, Amazon took nearly 7 years to sort of break out and get back above the dot-com crash all-time highs. But during that time, it went from strength to strength to strength to today, entirely changing the world of commerce. I believe Hedera Hashgraph is on a similar trajectory. And we are hopefully going to continue to stay in touch, continue to have you on the show. Guys, if you are not already following Brandon, what the hell are you doing? There's links in the description. Go over and do that. If you want to stay up to date with the latest and greatest things happening on Hedera Hashgraph, with its ecosystem, with the controversy, I'm almost a little bit sad that we started with a controversy, Brandon, because I don't want people to think that the controversy that's going on is necessarily a bad thing. Yes, on the surface of it, it seems like a bad thing, but can we call this teething problems?
Absolutely. I think that that's all it is. And I think we're proving out whether the governance and the leadership within Hedera can right the ship. And I think that they absolutely have the ability to do so. One thing before we get out of here that I would suggest anybody that's wondering about Hedera is go out and start to use the applications. Go out and use Saucer Swap. Go out and use Hashback. Go out and use Karate Combat. Earthlings is a game that we have. They have a game called Steam Runner. That's all one word. You can check that one out. I have an application called Twigital. It's not only is it unique within the Hedera ecosystem, it's the only one of its kind within the entire crypto space. Go try these things out, and if you aren't blown away, I'll eat my hat, because the builders in this space, like I said, will not be denied, and the products they are bringing to market are really pretty unbelievable.
Yeah, Brandon, it has been an absolute pleasure as always. A massive thank you from myself on behalf of my community. And we look forward to everybody watching and listening to this interview. As always, Brandon, it's an absolute pleasure. Really happy to have you back on the show. And I'll see you next time.
Likewise, my pleasure.